everyone. Welcome to AWM Insights. It's your Power 3, at least a new Power 3. We got a CPWA, a CFA, and a Super Bowl champ turned advisor. We're Zach, Brandon, and Justin. Here at AWM, we're a community of athletes, founders, and investors on a journey to be the best at what we do. And we believe you deserve the same when it comes to your wealth. As you know, each week we cut through the noise of what Wall Street is selling you to bring you the knowledge, skills, and access you need to invest like a pro. And today we're tackling a topic that we hear all the time, how to actually educate yourself about investing. We're going to dive deep into that. But before we do, let's recap on some of the big events that are happening in the markets. The big news out, COVID cases on decline. This has been the lowest amount that we've seen since the start of the pandemic. And I can tell you, at least for me, I can't welcome this enough. It's been a great thing to start to see. We're starting to see things open up. I know everybody's excited for it. We've also seen pretty exciting event. The G7 is actually nearing a global corporate tax, something that I personally didn't think we'd see so quickly, but could have big ramifications across the markets. And then, of course, the crypto crackdown coming out from China. We got Elon coming in, the pump and dumps. We got all kinds of stuff going on, but definitely been fascinating to watch this asset climb in value, crater in value, come back. It's definitely kept us on that roller coaster ride. And then last but not least, we've had earnings season. It's all but wrapped up now. I think it's 95% of companies of the S&P 500 have reported. And it's been one of the best in most recent memory. So as we start to jump in here, we're going to start talking about how to actually educate yourself about investing. You got to start to ask yourself, if we've had all these earnings come through, are you taking that into account? So Justin, I'd love to hear from you. You know, when we have these clients that call and say, for instance, hey, I want to open up a brokerage account, maybe open up a Robinhood account and start to trade a little bit so I can learn. I'd love to hear your take on that and maybe what questions that people should be considering.
Yeah, well, first and foremost, I mean, you got to ask yourself why. Why are you investing? Are you just doing it to keep up with the Joneses? Are you doing it because you have a family priority or a value that you're trying to accomplish and reach? I mean, that list of questions is almost endless, but you should start there. If you're just trying to keep up with the Joneses, you're not investing. I think that's a pretty good point to focus on first and foremost here, right? What is investing? Investing is taking your hard-earned capital, usually from your human capital, those hours, the effort you've put in on the field, off the field, in the boardroom, starting your company, whatever the case may be, converting that into financial capital, and putting it into the markets so the market can use it in its most efficient way to further grow companies and the economy. That is investing. If you're just saying, hey, I want to take this $1 and turn it into $2 overnight, I mean, that's all but gambling, right? Or playing the lottery. So you really have to bifurcate and define what is investing, what is day trading, what is gambling. Day trading, gambling, speculating, those are all kind of similar categories, similar flavors of the exact same thing. Investing is way, 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 way different than that. Are you going to take the time, the effort to understand a specific company's financial statements, what the bottom line, the earnings, going back to the earnings season, what that company's earnings were this past quarter, what they're expected to be next quarter or way into the future, and what price you're willing to pay for those earnings, right? That's kind of the basic building block when it comes to investing in a single company. And you know that there's all sorts of risks that we can get into with that specific investing application, which we do time and time again, and the lower probability outcomes that you can have if you're investing in a single company. But that is investing, right? So again, I'm going to circle back to this idea of why are you investing? Make sure you understand what the true definition of investing actually means. And then educate yourself. There's so many resources. We love to be a resource to our clients as well around this topic. And we have other groups within our network that provide both structured and unstructured educational opportunities to explain, educate, and teach and kind of open up the complexities of the markets overall to clients. So I think I'll stop there, but those are some critical things to think about and take a step back before you even go down this route of, okay, should I open a brokerage account? Should I hire an advisor? Should I, whatever, some blend of those two things together. Like, don't even go there until you have those in-depth conversations, ideally with your family and or your partner or whoever they may be, to figure out what that is.
I'll jump in. I think as a player, it's a huge deal to be an informed investor, to understand, and you don't need to know the gritty details, but you need to understand that, there is talented professionals in the investing game. So, and it's made it so easily with Robinhood, no transaction fees, to trade like there used to be. And with COVID, guys were at home, and I was talking to NFL players last week, and they want to get into the markets because they see them, all they've seen is the rally, and they've only been in since post March, so they only know straight up basically, and that's not realistic going forward. And so one of the biggest things is just, why are you investing? Are you actually investing for a reason? Or are you just trying to get returns? Because if you're trying to just get returns, you're going to be taking a lot of risk that maybe you don't know and you don't understand. And then you add in leverage. So there's so many things that the guys can get caught up with in the locker room with the FOMO. FOMO is real right now. You see it in the Bitcoin market. You see it in all crypto. It's just being talked about in the locker rooms a lot. And unless you have a firm understanding of the whole investment world, it's very easy for a player to get off track.
I think that's a great point, Zach. And one thing I think about quite a bit is, sometimes going and opening that brokerage account, buying a couple stocks, it's what are you really learning through that process? And, I think you make a great analogy. You made it before we even got on this call was, it's like going out and throwing the football around with your buddies at a tailgate. That's a lot different than going playing in the NFL. And, I know that's an extreme example, but at the same token, also it's what effort are you actually putting in to learn about this? So going and opening a brokerage account, buying a couple stocks, quite frankly, is the lazy way of doing it. And you're probably not setting yourself up to learn. If you really want to learn, it's take advantage of the opportunities that Justin mentioned. It's go to a Dimensional Fund Advisor Investor Symposium, sit through the 2 days and learn about all the academic research that supports investing. Or go, if you want to learn about venture capital, there's venture firms such as NextPlay that put on these educational events. Go and do those things if you really want to learn. Right?
I'm going to interrupt you. Then I just got done with the NextPlay fellowship program, and they only pick 20 guys. You got to apply for it. I think they're going to do it every year. I recommend the program because it teaches you over 2 weeks. Slams in as much as it can about venture capital in 2 weeks. That even with my finance undergrad and the certified financial planner education, I still learned a ton. And there's active NFL players in there. There's other guys, other athletes from other sports in there. And that's how you really learn. You learn it the right way. The process is what differentiates, good returns from bad returns. And, I'll go back to towards the end of my career, I was, trying to be a stock picker and investing in, I got lucky and was picking tech. So in, 2012, 13, that did pretty good. But then I charted myself against the NASDAQ index. And I just could have bought the NASDAQ and, played video games or something.
Yeah, and I think it's good to underscore why this is important, or why. And I don't think people would necessarily question why educating yourself is important. Although maybe in this day and age, who knows? But the better you understand the investing landscape and why you're doing something, the better you'll be able to contextualize your portfolio. You'll minimize the FOMO that Zach mentioned. And it's not just unique to athletes. I think everyone does. We talk about our croc brains, if you will, and it's almost hard coded in to have that FOMO. If you're hearing about somebody who bought Bitcoin at 10,000 and now it's 38,000 or 40,000, wherever it is today, and it's hard not to be jealous of that. Now, in most cases, that same person who's highlighting their Bitcoin trade or whatever other trade they're highlighting, chances are they have a couple others in their portfolio that didn't do so well. But if you are really comfortable and understand why you're investing, what you're trying to accomplish, then it gives you the tools to take that information and have less of that, fear of missing out, or have less of that, I gotta scratch this itch, or if you still have that itch to scratch, you do it in a way that doesn't destroy your ability to meet your goals and what's important in your life, right? So I think it's really important to go back to that context of why we're having this conversation, I guess, at the end of the day. Not only do we totally encourage educating yourself, but we also think it makes for more fulfilled clients, more fulfilled investors, more fulfilled human beings, if you will.
Yeah, and I think for athletes, it's if you're going to have to do that stock picking or think you can outperform the market, do it with a small enough amount of money. It doesn't matter. Less than $5,000, whatever that might be, and be okay with underperforming, because that's what the data shows. You'll probably underperform. And I compare it to, like, when I was in Seattle the year we won the Super Bowl, Kenny Chesney came out to practice and we got him a uniform, put all the stuff on, and he went and ran routes because he had to be wide receiver because he's about 5'5". We didn't go live on him. Luckily, he didn't get tackled, but he got to run a slant and caught a slant from Russell Wilson. And everyone's like, yeah, I mean, he's not an NFL player. He's not a professional. And it's no different in investing. You're stepping into the arena with, there's someone on the other side of your trades, probably an algorithm, a robot these days, but you're probably not going to beat them. So you just got to be a little humble about it and accept that there's a professional, and then there's you step into that arena, just be ready that you're probably not going to outperform.
Yeah. Well, even at that, here's an interesting question to throw out there. Rhetorical question, but 6-7 years ago, I was at some conference and listening to a portfolio manager talk. He managed, a couple $1 billion US equity fund of some kind. I don't recall the specifics, but I do recall he said something along the lines of, why should I expect to have any additional insight into the future of Apple than the other 50 analysts who are covering that individual stock? And I mean, it takes a little bit of humility for someone managing billions of dollars to say that, but he understands, he's educated, he looks at the playing field. He's like, you know what, the odds over there, they just don't make sense. I'm going to try and play over here in this other sandbox. And I think the odds are stacked in my favor. He did in that specific case, but right, that's an educated comment to make, where so many guys are day traders, if you will, are saying, oh, well, wait, I know what Apple's going to do next quarter, or Amazon's undervalued, right? These large cap companies that are covered, like, I mean, every waking minute of the day is basically, you can find some little tweet about Apple or tweet about Amazon, and there's so much information. Why do you think in those specific examples you should have some unique insight that could potentially add value aside from luck, right? Aside from luck. And so, step back and think through that one.
Yeah, and you might get lucky, right? But I think that's the big question. Who are you playing against? And then how are you going to measure yourself, right? I mean, we've all been there. I mean, Zach got to the pinnacle, but it's like, oh, you're a pretty good high school player. And then you go to college and you're like, shoot, I'm not as good as I thought I was. And then you get to pro ball, and it's like, man, this is really freaking hard. And you got to along the while, right? Just understand who you're measuring yourself against. And the same thing goes with investing. Who's on the other side of the ball? And then how are you actually measuring yourself? We get the comment all the time, like, oh, I made 20% last year. Well, was that even good? Who knows? Are you comparing yourself to the S&P 500? Are you comparing yourself to the Russell 3000? Okay, well, you had 5 stocks. You had so much more risk in your portfolio than the Russell 3000 did. So if a Russell 3000 returned 20%, you probably should have returned 30 to be compensated for what you just took on. So I think it's just understanding those things. You're probably not going to figure that out just by going and opening a brokerage account. We want you to be educated. We want you to go through that process. And so lean on the resources that you have. You certainly have us. Ping us anytime. You know, these podcasts are for you guys and gals. So we encourage the questions, help us to form, what we cover on the rest of these podcasts. And then, as always, we encourage you to head over to awminsights.com, download our 10 key principles to investing like a pro. There's a place there to shoot us a question. For those of you that have our phone numbers, text us. We love to get back to you that way as well. So with that, until next time, own your wealth, make an impact, and always be a pro.
The information in this podcast is educational and general in nature and does not take into consideration the listener's personal circumstances. Therefore, it is not intended to be a substitute for specific, individualized financial, legal, or tax advice. To determine which strategies or investments may be suitable for you, consult the appropriate qualified professional prior to making a final decision.